Okay guys, welcome back to the channel. Thanks for tuning into today's video. We're going to go ahead and take a look at Bitcoin. Now, Bitcoin has had a volatile last few days. Since the 1st of August up until the current date, so about 6 days, we've had this rapid movements between this major trigger zone, which is 23,440 area, into this falling wedge formation, this downward trend, this downtrending support line. And we haven't really been able to get that hourly close above 23,440 for the last 6 days. And this level is indicating, the major trigger zone that would actually propel us back up to retest that 23,800 level. To quickly fill everyone in who's new to the channel, 23,800 level is the major short-term resistance that we do need to break, and it is a macro resistance zone, but it's a short-term resistance, meaning we're very close to it on the larger time frame over here, which we can see back in the 20th of December 2020, which acted as that major trigger before the explosive move upwards. Now we do have that resistance that we're still fighting with. We do need to break over 23,800. A daily close and open above 23,800 would indicate the next move up is occurring, and the next move up will take us through this low volume range all the way up to 26,500. We can see 26,500 represented here, and into 28,000, which is this major resistance support range. Okay, we'll talk a little bit more about that later on, and we'll get into the video. Before we get started, guys, head over to our Telegram channel, post daily updates, market analysis, a whole range of more information. You can go ahead and access that with a link down below, first link in the pinned comment. Go ahead and join now. Let's go ahead and get back into it. So in recent events, guys, in the last 12 hours, we had a little bit of news drop about I think it was the NFP, and that came in, and for those of you who don't know what that is the non-farm payrolls, and it came in at around 528,000, which was, if I go ahead and quickly do the math, it was over 250, so it was about 278,000 higher than estimated, but estimated was around 250,000, so massively more than expected. And I got a little quote over here, and I'm just going to read it out. It states, "If NFPs are expanding, the increase is an indication that the economy is growing. However, if increases in NFP occur at a faster rate, this may lead to an increase in inflation and may be viewed negatively for the economy." So what we're seeing here is that the NFP came in massively higher than expected. What that does, it increases the value. So it shows that the dollar has strength. It shows that the economy has strength. What happens? Money flows into the dollar. We see the DXY rise, which we did see, and we see risk assets fall. And we talked a lot about that correlation between the rise or the strengthening of the dollar and the falling prices of assets, particularly risk assets in the market. We've talked about this for months, since November last year. Even before that, we're talking about this. As we see interest rates rise, we see obviously money flow back into cash out of assets. As the US dollar gains strength, we see the reverse. As the US dollar loses strength, we see the reverse. We see money flow from cash into assets, asset prices rise, and what we're seeing now is the US dollar gained strength. Yesterday, when this news came out, the economy was stronger than people expected. Now, I do believe the numbers are not particularly, I would say, reliable. I would say they're falsified to some degree. I think that just like the CPI numbers, they manipulate the data in ways to show better results. And I think we don't have an employment problem. I think we have an underemployment problem, meaning there are enough jobs, but there are less hours that people are able to work. And I think that's one of the biggest problems. So we're showing 528,000 plus over here on the NFP, but still, inflation's high. People are unable to afford their bills, their wages, average income's dropping, average hours worked dropping. That's the problem we're facing. So does that really show us our economy is strong? Not really. So it really does show, this discrepancy between what the data suggests and what is the reality of the situation, and how the people behind producing this information kind of manipulate and skew the data to promote a narrative that they want to push. And the narrative that they want to push still is that the economy is in a better position than people expect, a better position than what we see, and that it's not as bad as everyone is saying. And the reality is it's been awful, it's been horrible for months, and we have been on top of that. We've told you about this, but that doesn't mean that I don't expect Bitcoin to potentially rise. We've talked a lot about the bottom being in at, I want to go back to this chart, at 18,000. And for those who've been following, who already know, I was publicly expecting a downtrend at the 14th of November, that was my initial prediction. I was on the Wolves of Crypto channel talking about that there. I had it on Telegram, Twitter, I was talking about all over the place. That is when I came out publicly, first person to say the bot at the top is in. We do expect. My initial prediction was in fact the 200-day moving average. That was my initial prediction. We'll get that correct. After that, if we lost the 200, my prediction was the 18K bottom, which was represented by this uptrending support line. Again, this chart is an incredibly relevant chart, incredibly important chart, probably the most important chart out there, yet not many people believed it at the time, but they believe it now. Anyway, we bought 18K bottom, and the technical indicators were looking bad, the economy was looking bad, yet the price has risen. Because for cryptocurrency and financial markets, the economy doesn't necessarily need to be looking good for the prices to rise. All it needs to do is needs to have the perception that it could potentially be getting better in the future and the financial markets will rise because it is expected that the economy gets better. That's it. So when we saw the CPI come out and we had the interest rates come out and they were equal to that of the last quarter, okay, or last rise period, people were like, oh, we haven't increased any more than our last period, 0.75 basis points. What does that mean? Well, it means that the government or the Fed or whatever don't expect inflation to rapidly continue at a higher rate, so they keep the interest rates the same, thinking it's adequate, and people take that and they believe that systematic risk has decreased. So let's go ahead and talk about that because it's really important. But systematic risk drives a market. I've gone on a bit of a tangent here because I said I didn't want to talk about the macro, but sorry guys, I'm on a tangent over here, so we're going to talk about the macro. As systematic risk decreases, so we get this arrow going this way, okay? Arrow this way, and this is the best way I can explain this in a visual concept. When systematic risk decreases, now systematic risk is interest rates, inflation, governmental policies, monetary policies, everything that's affecting the investor, everything that's affecting your dollar value that you don't have control over, okay? Everything you don't have control over. So systematic risk, as it decreases, as it increases, we get this line moving downwards, okay? The line moves downwards, okay? And the beta increases, we get the beta increase, and then the return and risk, so the risk reward ratios on these investments, they decrease, okay? They decrease. And then therefore people are less likely to be buying them because there's a higher risk on your return. People don't want to be taking high risk return investments, all right? And that's in conjunction with interest rates rising. I mean, debt obligations on these loans that people have taken to acquire these assets, particularly companies, start to rise. So the debt to service ratio increases, the risk increases, the return decreases, companies offload their balance sheets. And I've told you about this months ago, and it's happened. We've seen it happen. This has already happened. So the question is, what will happen next? So people are expecting inflation, or more and more people are predicting that inflation is either nearly topping out or expecting to balance out at some point because our bond yields and our inflation have kind of reached that equal level, meaning the bonds aren't overpriced or above value compared to inflation. It's kind of met that the interest rate, it's kind of met that equal level now. Everything's matched up. So people are expecting us to be near the top. So as long as there's a perception that systematic risk is going to decrease, the cryptocurrency and the stock market will start to see some positive movement upwards. And that is exactly what we've seen. We've seen that, we've seen DXY drop, we've seen the cryptocurrency markets move upwards, we've seen the stocks move upwards. That's exactly what has happened. It's all explained by the macro. The question is now, will this actually play out more? Will the actual systematic risk, not the perceived systematic risk, will the actual systematic risk decrease? And this is really important because we have the CPI numbers coming out in 4 days time or 5 days time, depending on what time zone you're in. So 6 over here in Australia, so 5 days to me. If you're in America, it'll be 4, 5 days, whatever. And that's going to be an important one. That's going to be an important one because that's going to tell us what inflation is looking like. And that's always relevant because inflation drives decisions for interest rates. Interest rates affect our global economy. It affects our financial markets. It affects investors' decisions. It affects companies' decisions, balance sheets, all that kind of cool stuff and interesting stuff that we need to be aware of when we're trading macro trends. So ignoring all of that, pretending it doesn't exist, what is Bitcoin looking like right now? Well, like I said before, we're in this major horizontal resistance zone. And this horizontal resistance zone is the trigger. It is the trigger to a move up to $26,000 to $28,000. Regardless of what you think going to happen with the macro, zoom out the macro, forget about the economy, take a look at the chart for a second. What is the chart saying? Well, this is what the chart is saying. It says if we get above 23,800, we will push upwards to $26,500 to $28,000. That is what the chart is saying. Now, will the macro environment enable a move like that? Will it facilitate a move like that? Or will it suppress that move and knock the price further down? That is something we have to wait and find out for. I am more leaning towards the side that I think the bottom is definitely an 18. I think we move upwards here. And just because, we don't move initially upwards, we definitely don't have to do this. We definitely don't have to do that. We can come back down, retest this zone, push back up. Hell, we can even come back down over here. As long as we don't create any low from this level, technically, in my opinion, the bottom is in, and that would be the bottom. So even if we push back down to $20,000, we're still creating a low high. Higher low, sorry. We're still creating a higher low. And I think it's really important that people have to understand, just as in a bear market, which we are still in a bear market, but just in a downtrend, just like an uptrend, the price won't just only go up. Just like the price won't just only go down. We see these little, staircase effects. Down a little bit, up a little bit. Down a little bit, up a little bit. And it's going to happen again. All right, okay, and let's have a price moves. All right, we don't just only go up. It's very important that you don't identify with the previous color of the candle. So you don't say, oh, the last candle was green, therefore I'm bullish, or the last candle was red, and therefore I'm bearish. You have to identify the trend. Okay, so what is the trend saying? On the short term, the trend is saying up. And the reason why we know we're uptrend, because we have this uptrending trend line over here that clearly is pointing upwards. So we're very clearly in an uptrend on the short term. On the macro, if we go ahead and zoom out, we are still in a downtrend. We are still in a bear market. We are still in a downtrend. When does the bear market break? All right, this is our descending channel. This is a bear market. All right, sorry, my chart is messy. I like to draw a lot of stuff on you if you're new here and you notice my chart is a mess. Hang with me. You'll get the hang of it in a second after a few videos. Anyway, so macro downtrend over here. We are not bullish. We are not in an uptrend until we flip this zone. Okay, and this zone is the area we get up to if we break 23,800. So we get a chance to flip that macro descending channel if we push past 23,800, and that is why 23,800 is such a relevant level, such an important level, such a level that we've been discussing for the last few weeks while we've been in this range, because I've identified how important it is. Let's go to this more time frame. And what would facilitate a move up to 23,800? Well, we have our major resistance level here. We talked about this already at the start of the video, very, very briefly. We'll talk about it again. This major resistance level, we've found, 6 times we've found resistance on here already. 7 times if you count that one. We found resistance on here, which is 23,438. This is our trigger, okay? We're looking for an hour open close above here to push upwards through this low volume range, upwards this mountain, right over here, 23,800, and potentially push upwards past that resistance. Okay, that is what we're looking for the short term. Of course, if we do fail to get that, we can expect a move to retest this lower level, which is a zone we've been coming back to a fair bit lately, which is 22,930, and potentially go back down even lower. And obviously this will be the level we're looking for a retest if we do push any lower from there. Okay, I think actually my chart has moved a little bit over here. I actually want to move that one back down. I don't know why. Maybe it accidentally moved. Let me just go back to my daily and have a look. You got a lot of stuff in your chart. Sometimes you move things around accidentally. Okay, so it's over here. There we go. Cool. That's all I want to talk about today, guys. I hope you enjoyed the video. I hope it's found it beneficial and educational. I think for everyone who's in the market right now, just scalp. Just simply scalp trade. Don't be worried about catching these big moves right now. Wait for it to happen, because as long as we're in this horizontal resistance range, this gray box, we're going to see fluctuation in price. And we've made everyone aware of this for a long time now. We are going to see fluctuations in price. We are going to see a lot of volatility, a lot of price swings up and down, up and down, up and down. I think it's easy to get caught up in these moves. Like, look at these candles. They're 4-hour candles. Look at these candles. It's insane. It really is. The price action is insane. So don't get caught up in the moves. Be patient, be aware. And more importantly, while we're in this sideways range, yes, you can swing trade. You can scalp trade these. But this is where you should be developing a plan of action depending on where the price goes. So have a plan that you can execute immediately if we do push upwards. Have a plan that you can execute immediately if we do push downwards. And I know people are saying, oh, Whale, you're not saying anything. You're just saying we can go up and down. If that is the conclusion you're coming to from this video, you have missed the entire point of the analysis. The entire point of the analysis is not to tell you what to do now. is to prepare you for what happens next. Because what happens now is irrelevant. We are in a massive sideways horizontal resistance range. We are going to move up and down. We're going to see volatility. I'm not going to try to tell you what the next move is in the immediate short term on the hourly, but what I am going to tell you is the money will come from the directional break. This is what we're interested in. We don't care about this. We really don't care, because you can make a little bit of money in here, but you make nothing compared to what you could make when the direction is decided, when the price moves in a direction. Okay, directional breaks is where we make that money. That's where we make the money, okay? That's where we make the big profits, the big trades. The scalp trades over here, 100% profit, 200% profit on a high leverage short, whatever. You want the big trades, you wait for the breaks, okay? I'm gonna leave it there, guys. I hope everyone enjoyed the video. Consider liking, commenting, and subscribing, and I'll catch you in one tomorrow. Cheers. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.